Hi, good morning, everyone. Louis Porcelino, Monday the 16th of November, and this is your ES Morning Call. So, unless you've been living in a box all weekend, you understand what happened with the Paris attacks and the effects it's had on the markets. Um, also, we've been trading higher overnight, but we did make extreme low in the S&Ps, and also we were coming off, I think, 5 lower days in a row. So we'll take a look at the day chart. One of the issues that I keep looking at. Put your headset. Oh, your headset over. Oh, I'm sorry. That's better. Okay, sorry. So, like I said, unless you were in a box all weekend, we all realize what's happened in France and the effect of the terrorist attacks in France and its effect on the markets. Not as severe as 9/11, but I also think that, thank God it wasn't as severe as 9/11. But every time I see a terrorist attack, it reminds me of the famous line in the movie from The Godfather. And when people don't, think that, they write this off as people that are extremists. The Godfather is I think it was Godfather 2, when Michael's in Cuba with Hyman Roth, and he says to Hyman Roth, I saw a dissident today blow himself up instead of getting arrested. He goes, these people are crazy. What's that mean to you? He goes, that means they can win. So anyway, when you think about how radical and the fanatical behavior of these Muslim extremists, it's scary. So anyway, back to the markets. I think the markets themselves have responded to the market to this. Also, we are also responding to a couple sort of a two-edged sword here with the Fed. Resolved the fact that I think they're going to raise their rates, and I think everybody believes that too, and the markets are pricing it in. Certainly, gold, bonds, and the S&Ps. So, we have had lower closes, 5 or 6 lower closes, and I think the market's ready for a breath. I think the big day this week is going to be Wednesday with the Fed minutes being released. Okay, so that's going to be another thing we have to keep an eye on. Let's get to the charts and share the charts. We'll talk about these things. And if you got any questions, get them into Anthony and we can try to address them this morning. All right. By the way, coming off a great weekend, my leathernecks went down, fell at halftime. We're losing 20-10 and came out. And my son had 10 catches, 180 yards. 78-yard touchdown. It kind of sparked the second half, and we won in overtime, 37-30. So this weekend, the Jackrabbits of South Dakota will be in Macomb, and we have to beat them. So I'll be preoccupied with those thoughts this weekend. All right. So let's go here. Share. All right. So I'm going to show you the SPX chart first. Okay. So we've had cash close of 1, 2, 3 lower closes, and we've had over the 1, 2, 3, 4, 5, 6, 7, 8 days. We've had 6 lower closes over the last 8 days after we've made the highs. We did take out our day pivot down here, and I don't know if this is going to really mean that we're going to be in a choppy sort of market because this may have been an overreaction to what happened to Paris, not that. And so on. So I'm a little concerned that we took out the day pivot into cash, So we have to keep an eye on that. All right. Also, looking at the futures, we would need a close under this is basically right here at 2013 quarter. All right. And we are since we've made the highs, 1, 2, 3, 4, 5, 6, 7, 8, 8 days we've had one higher close. So, I think that this market is reacting not only to the new highs, but the fact that the Fed is resolved to the fact that they're going to raise rates. Okay, so you got to keep an eye on your long term perspective here, but also. This is an area I would expect the market to firm up in. All right, expect the market to firm up. All right. let's look at the overnight action based on profile, and then we'll go here. So we are looking at a high up here. I always put it on the line, 2025.75. Okay. And we've got a low way down here of 1998.5. Okay. Now, right here, I have some single prints from 203 down to 201. Remember, I don't count them unless we take out those single prints in the day session. Not that I don't care what happened overnight, but for me, these single prints were made in the day session. They're going to have to be taken out in the day session. Okay, so you look at the profile, really large range, based on the news, and the market is now trading back down here to 2016. All right, so I think you're going to get a two-sided trade today before the market makes up its mind. I think that definitely, this is in play. This is definitely in play today. I don't know if we stay down there, but I think we're definitely going to get a two-sided trade with that bottom being incomplete in this buying tail that was formed overnight. Okay. I'd be looking at a couple numbers. We had a bull bear zone. I'd be looking at 2013 half, and then I'd be looking at bull bears in 2007 quarter. All right. So then underneath this market, I think there's, we've talked about it. When the market did rally and we came off the lows there in August, we did go far and we did go fast and we went hard. So there has been some poor structure left on the bottom. We've got a unfinished bottom here. Like I can get back over here and pick this stuff up. I think I got to redo my chart. I'm sorry, but I put some lines on here that are important. I got an unfinished bottom down here at 1982 half. Okay. And then, I have some other, I'll get these out today because I have to redo it because I was doing some work over the weekend and I shortened the time frame where I was looking back. So, based on that, let's take a look at the day chart, how the profile looks. So we got a profile high of 2037. We got a point of control of 2027. Here's your Globex high right there at 2025 and a quarter. 2023 right here. Okay. And then we're looking at the bull bear zone of 2007.75. And then we got a Globex low down here at 1998 half. 1998 half. All right. So, like I said, I think we're going to get a two-sided trade. Remember, it's always the key that we have to take out a Globex high or low to continue. If you get some failure up here and we try to get back in value, look for the market to sell off. And I think you're going to, this one of these days, we're going to be looking to buy or sell extremes. Buy or sell extremes, okay? Let's go to crude. Crude, as you know, I'm bearish, and we've taken out. We took out the pivot here when it was at 91.93 or 41.93. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9 lower days. All right. We had a little bit of a rally overnight, and right now the market is trading inside of value. It's trading inside value. Okay. And let me bring it down in here. And right here, trading inside value. Low is 40.47. We got a bull bear zone of 41.01. 41.01. Top of value of 40.88 and point of control 40.73. 40.73. Okay. So I think that, we may get a breath day today where, the market kind of takes a breath, and then we go and maybe get a higher close today and then continue with the trend. Let me bring this in here now. All right. So GC. So this is another one. It was, took out our day pivot right here at 11/13/40. We've made a high. We've made a bottom down here at 10. Let's see if I can move this up, get a better look on the chart here. All right, there we go. So, we made another low down here at 1073. So look at all the, I had all the low close, we had a higher close here, and, we spiked up overnight, and currently gold is trading just above value. Had a very tight range on Friday, and I think that, it's reacting to the fact, what if the Fed does not raise the rates in December? So we're sitting here. We got a bull bear zone of 1083.90, top of value of 1082.40, volume point of control of 1081.20, and then we've got 1080.80 as the bottom of value. So I would keep a eye at the 1083.90 area. Okay. Definitely gold is moving with the idea that they will raise the rates. Okay. Bonds, we took out our day pivot when we closed underneath the 52.31. We've got a little bit of a rebound here to the 54. And, this is, look, it's really hard to trade bonds when you got the Fed so active in quantitative easing and coming off zero and everything. So, I just think that the bonds are going to react, they're reacting to the rate cut. I think that this spike up due to the Paris tax and the fact that the equities have sold off, and if the Fed is really truly data dependent, and they decide that that the rate hike will strengthen the dollar and be bad for the U.S. economy, I think that they may come off the idea that they won't raise the rates. So it's really kind of hard to trade these things. All right, so 54.01 is the bull bear zone. We've got right here 53.19 is a value area high. Okay, we're trading above value. 53.11 and then 53.13 is the point of control right there. So and then once again we have the Fed minutes coming out on on Wednesday. So I think that's going to have an effect on the market all week, along with the other financial data that goes on. Okay, so just to recap, let's see if we've got our, let's go here. I got the 5-minute pivot right up here at 2023.75. Okay, let's look at the Russell. The Russell right now currently is in a sell with a pivot up at 1146.40. Okay, I'm looking at the YM 17,229, 5-minute pivot, and okay, 4506.75. So all the sisters on a sell. All right, and the on the 5-minute pivot. Now, I saw somebody on a Twitter. Let me come back to you guys on this, and you have to understand that once we start the program and you get in the program, you're going to understand how you use all this information. Let me stop sharing the screen. So I saw somebody respond to me on Twitter. Hey, I sold it in the hole when I went through the 5-minute pivot. Look, the 5-minute pivot is, to us, the way we use it, it's our pivot, is a trend indicator change. But that doesn't mean that the trend indicator change happens immediately. Trust me, I've been using these things for years. It allows me to ascertain that the short-term trend has gone from a buy to a sell, and we may get a retracement that would be a great area to be a sell. So you need to understand that just because I tweet out there for educational purposes that the 5-minute pivot has changed, it's alerting you to a trend change. You should then be using every other tool that you have, whether it's market profile, using rotations, using MACD, anything that you have in your arsenal, and look for good points of entry. That's the things that these things are. We're trying to alert you to trend trade, whether the CCI is red, whether it's green, where it's in gray, where it's in a neutral zone. So those are the things that you have to understand. If I tweet out that the 5-minute pivot has changed, it doesn't mean, so right now I'm starting out with all the 5-minute pivots in a sell and they're up above and all 4 indexes. To me, that's indicating after a whole night of up, okay, that there's an imbalance in the TPOs from the overnight, okay, but there's an imbalance on the long side. What did we do all day Friday? We broke all day, right? So the imbalance could be being, there's an imbalance from the shorts on Friday. Then there's an imbalance from the fact that there was some reaction to the France terrorist attacks. So I look at these things and it gives me an idea how I frame all my opinion. I can't just take one indicator. If there was one indicator that I could put out there, it says, okay, buy it here and sell it there. And if anybody had it, okay, would you sell it? And how much would you sell it for? No, you would not. You'd keep it for yourself and you just make money. So understand that this thing's a process, and there's 30 years of experience going behind this, and we're going to teach you the process, right? And show you and give you the tools that will aid the process. So, all you newbie traders out there that, see something on a tweet, which is trying to educate you to what's going on in the market, doesn't mean, I should just get short. So I just wanted to get that out there. So, all right, everybody, have a good day trading. Remember, stay on the green side. I think we're going to have a 2-sided trade today. I think that, we left there's some poor structure on the bottom, but, we're coming off a market that's sold off now in the last 5 or over the last 8 trading days. So, there are a lot of shorts in the market right now. All right, everybody, good luck, and I'll talk to you tomorrow, and stay with us on Twitter.